We are continuing our coverage of the coronavirus now, and many people are currently asking how the virus may be impacting mortgage rates. Well, we're joined now by Michael Newman with the Newman Group at Evergreen Home Loans. Thanks very much for being with us this afternoon. Well, the federal government is lowering some of those rates, but that prime rate doesn't necessarily mean your mortgage rate's going to go down, right?
That's correct. Yeah, basically the misnomer out there is that the Fed, when they cut a rate or increase a rate, that's directly going to affect mortgage rates, 30-year, 15-year rates, and that is not the case all the time. It is not directly correlated. More so, it is affected by the mortgages are affected by what's going on in the stock and bond market, and most importantly, the bond market. It is an inverse relationship that we have, and as bonds go up, interest rates go down.
Now, we did see mortgage rates specifically go down recently, but you say that really quick dip is over for now, at least?
Well, again, mortgage rates are still at historic lows overall, but over the last 2 or 3 weeks, we saw major historic lows, unbelievable interest rates. And what has happened because of that is we have got what's called a glut that has happened. Basically, almost 14 trillion people were eligible to refinance, and to put it in perspective, about 2 trillion mortgages were originated last year in this nation. So there just is not the capacity, and so what ended up happening is we are now seeing mortgage companies respond, and rates have actually come up a bit. Again, still low, but they have come up from off of where they were.
So if you're either buying a house or looking to refinance, are we still in a period where it is a good idea, or is it sort of an individual case?
I think it is certainly case by case, as really it always is, but we are still at historic lows. I mean, we are super blessed to have an interest rate environment like we do, but don't expect what they were 2 or 3 weeks ago necessarily at all, because they have increased. But there is a little hint out there, a little rumor that the Feds may put a little surplus into the market and start buying some of these mortgage-backed securities as investors have slowed down. And so we'll see what happens. So stay tuned, but still a good time. Just really not quite as good as it was.
All right, but still good. Michael Newman, appreciate your time, and we'll keep everyone posted on those numbers, as I'm sure you will too. Thanks very much for the information today.
Thanks, Brian.